I've been trading the AM session for over 4 years, and I'm going to show you the simple smart money strategy that allows you to catch moves like this, and this at 9:30 using only 4 components. My goal for this video is to show you what it is you'll be looking for, the logic behind why it should work, increasing your understanding of ICT concepts, and give you a practical framework to applying it so you can actually make money and be able to think independently beyond this strategy. I'm also going to go over some trade examples to give you a visual understanding of the strategy. So if that sounds good to you, be sure to stick around and watch this video all the way through to the end. Alright, so the key components you're actually going to need to make this strategy work are as follows. You're going to need the 9:30 opening price at New York. You're going to need an opposing move, a key liquidity sweep, and a confirmation in the change in the state of delivery. And don't worry if that sounds a little bit confusing right now, because as we progress further into the video, I'm going to be breaking everything down so it makes perfect sense by the end of this video. I highly recommend that you guys use this strategy if you understand high time frame bias, or you simply understand the next likely draw for price, because all we're then doing is using this strategy to get in line with the direction of where price is going. Alright, so once we have our bias and once we actually know what price is reaching for, the first component that we're going to be looking for when we're going to be using for our strategy is the 9:30 opening price. The reason why the 9:30 opening price is important when it comes to using this strategy is simply because it allows us to be able to gauge and see the manipulation within the price delivery. And to put it in the simplest words possible, if we're bullish, smart money likes to accumulate longs below the opening price, and if we're bearish, smart money likes to accumulate short above the opening price. And the second component is the opposing move. That is that manipulation move. And what do I simply mean by this? So after we have our 9:30 opening price, we want to see an opposing move that goes against the intended direction of price, and that's the job of the opposing move. And what do I mean by this? Simply put, if we have a bullish bias, we want to see price go lower before it goes higher. And if we're bearish, we want to see price go higher before it goes lower. And we want to see that opposing move go ahead and sweep key liquidity. And what is key liquidity? Well, key liquidity rests within the market above previous day's highs or below previous day's lows, above previous session highs or below previous session lows, above 3 days highs or below 3-day lows. And the reason why I refer to that as key liquidity is that the market typically likes to seek liquidity at these different points. So it's very important that you guys go ahead and mark out those key liquidity levels ahead of that 9:30 open, because that's what we're going to be looking for our setups to form. So after that opposing move happens and takes out a key liquidity point, all we're simply waiting for is for confirmation of the change in the state of delivery. After that key liquidity has been taken, we want to see a break in market structure towards the true intended direction of price, because that break in market structure is going to be the confirmation that price is now ready to start distributing in its intended direction. So for example, if we have a bullish bias, what we're going to do is we're going to go ahead and mark out our previous day's lows, our previous 3 days lows, and our previous session lows, because we're going to want to see that opposing move from 9:30 trade into one of those key liquidity points. And here price trades into that previous day's low, right? And all we're doing is waiting, and we wait for that confirmation of the change in the state of delivery, which is going to be that bullish market structure shift towards the true intended direction of price. So when price takes that key liquidity point in here, which will be that previous day's lows, we just want to see price break market structure higher. And once we see this, that's going to be our confirmation, guys, that now price is now ready to start delivering on the buy side, and then now we can just simply get in line with price. So the whole idea behind this strategy is just waiting to see clear manipulation in the opposite direction. And by using that 9:30 opening price and marking out our key liquidity points and actually waiting for that confirmation in the change in the state of delivery, we'll actually be able to see that manipulation, and we're actually able to see price go into that distribution phase by seeing this framework play out. And that's what's going to give us confidence when it comes to executing on our trades, because we have mapped out what price has done and we're just using that information to trade with price, because we're not reacting to price, we're responding to price. We're waiting for certain things to happen and then we're acting in accordance to that. All right, now let's get into some trade examples. All right, in this example, it's actually quite funny because you do take a loss in the first attempt, because assuming we're bearish for this day, right? We see price at 9:30 go above, take out a key session high, which was a New York high, so that's a key liquidity point. Price actually breaks lower here, shows displacement and breaks structure toward the intended direction of price, retrades the fair value gap of the displacement, and then shows a willingness to go lower, but then we take a loss because we would have tried to hold for a 2-to-1 essentially, right? So our stop would have been above the high that broke the low, so wouldn't have been able to get a 2-to-1 within the trade. But as we can see, that price then starts to trade higher, right? And trades into our previous 3 days high above the 9:30 opening price. So everyone is thinking, oh yeah, buy, but of course we understand that price is bearish on the high time frame. We see price trade into that previous 3 days high, break structure to the downside, retrade the displacement fair value gap that's within that range that it broke structure to the downside. And all we do is literally take a sell above 50% of the retracement leg that broke the market structure. Stop loss above the most recent high before that low was broken, and then that would have been our short. And then you can see it gave way more than a 2-to-1. All right, in this example, we're going to assume that we had a bullish bias. So as you can see, at 9:30, we're waiting for price to go below one of those key liquidity points. And as you can see, price goes below the London low, takes the London low post 9:30, and then from there we have that bullish displacement, breaking market structure to the upside towards the true intended direction of price. And then after the break in market structure, the confirmation of the change in the state of delivery, the confirmation that price is now ready to actually go in its true intended direction, it retrades below 50% of that range it used to break that market structure upside, and then we see that bullish delivery. So it's so important to wait to see that confirmation, that break in market structure, guys. That's very important. And I really like to use this strategy on the 5-minute chart, the 1-minute chart as well. Even on the 15-minute chart, sometimes I'm looking for this setup. So those are the 3 time frames I'm hunting these setups on. So as you can see, it's a very simple framework. We're just waiting for key things to happen at the right time of day, and then we're just executing after the confirmation has happened. So we're not reacting to price, and we're not chasing price, we're actually responding to price. That's the very most important thing. We know why we're waiting for that 9:30 open, because that 9:30 open, typically manipulation happens at that time or from that time. We're going to wait for that opposing move. Why? Because that opposing move is going to be the highlight of that manipulation. We're going to wait for that opposing move to go below a key liquidity sweep. Why? Because that key liquidity sweep, price likes to refer to those key liquidity points when it comes to engineering liquidity. So if price goes below that key liquidity point at the right time of day, where we anticipate manipulation to happen, and then from that key liquidity sweep, we then see a market structure towards the intended direction of price, that's confirmation that price just went from manipulation, and now by virtue of it breaking market structure the upside or downside, it's now confirmed that it's now ready to go into the distribution phase. All right, as you can see in this example, the 9:30 open is here. Price from 9:30, we're waiting for that opposing move into a key liquidity point. As you can see, we do get that eventually. Price trades into previous day's low and then breaks market structure to the upside here. Obviously assume we're bullish for this day, right? And then price retrades below 50% of the range that it used to break this market structure to the upside. And then as you can see, price sort of dwindled around, but then still held the structure because would have been long below 50% of that range. So would have been long around here. And then our stop loss would have been at the low prior to that break in market structure. So price did take a little bit of time. And then as you can see, price then started to move, but then the structure did hold. All right, in this example, assuming we're bearish, as you can see from 9:30, price immediately runs higher. Everyone's thinking buy, 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 buy. We understand it's an opposing move, manipulation leg, goes into a key liquidity point, New York session high, and then breaks down. Was a bit of a slow breakdown here, but as you can see, we do have that market structure shift here. And then, as you can see, it's not really quite clear. We did get that retracement of 50% off that range, but it's not really quite clear. At this break, I probably wouldn't have taken this because it's just not clear. Like, it takes the session higher, right, which is cool, but we don't see that nice smooth run breaking structure towards the downside immediately. It's kind of quite slow. So that would have probably been a signal to me that, okay, I don't really like this. I need to see a clear break. And then eventually we do get that nice clean break to the downside with fair value gaps, with displacement, which is what we want to see. But we're still bearish, so we're going to be participating in that. And then, as you can see, price shows that clear displacement and then retrades into those fair value gaps within that displacement leg above 50% off the range, and then we're able to participate in that short setup. So it's really important to wait and see clear displacement, because clear displacement and the clear market structure break highlight intention, and what we want to see is the intention within price. And all we're doing, really, the main point of the strategy is to see clear manipulation. And then once we see that clear manipulation within that opposing move, guys, that's going to be a signal to then participate in price after. So it's not about, okay, we're getting in on that retracement of that first displacement leg. Sometimes you might not be able to get in. Sometimes you can just then get in later on. But the framework is already there, that you've already seen the manipulation, you've seen the confirmation and the change in state of delivery. So then you can just get in line with price. So you don't have to always catch that first retracement. You can just simply get in line with price after manipulations happen. That's when you can catch your continuation models. If you guys are confused about bias, I'm going to link a video to bias right here. Be sure to go check that out. I highly recommend. It's just going to make bias click and make sense for you. If you guys are not in my free Telegram, be sure to go join my free Telegram, because I do post high time frame analysis beforehand, and the people on Telegram will tell you that, you know, it's pretty accurate. I don't know voice myself, but it's pretty accurate. So be sure to join the Telegram. It's free. I hope you guys found value in this video. If you did, let me know in the comments below what you found valuable. Like and subscribe if you want to see more content like this from me, because I do make ICT related content on this channel. I just simplify it using the 9 years of information that I've just learned from trading ICT concepts. So like, comment, subscribe, and I'll see you in the next video.